We are officially live. Good morning and welcome to another episode of Money Matters. My name is Nev, and in today's episode, I have incredible news to share with you. For one, we're actually going to look a little bit at the market of what's going on, where the prices are, what is the direction, so that we can prepare if we are participating in paper assets such as stocks, for example. We're going to look into what's going on in the world of real estate a little bit as well. And we're going to be discussing of what the population is doing, what people are doing, because as you know about real estate, or hopefully you do know about real estate, part of it is location, location, location. But the part that they don't talk about that is just as important, if not even more important, are people, 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 and people come with behaviors, with different actions, and that all drives what we can or cannot do with our money, with our real estate, and whether it's going to be profitable or not. Finally, we have some great news, big news when it comes to the alternative assets, because real estate also falls under alternative. I don't know why I just said that. But, anyways, we're going to look into what's going on with the cryptocurrencies as well as gold and what the future may hold. So, as you can see, we have a lot to talk about, a lot of juicy news that you absolutely need to know, and only here on onedealaway.com. Let's do this. And good morning. Here we go. We are officially live and we're going to be doing this stuff. So let's talk a little bit about gold. Let's get started with that stuff. So let's take a look at the price. And as you can see, it sort of did a nice little consolidation right here. And we're in an uptrend. However, we also have a bit of news when it comes to gold, and that is that the gold price hits 1 month high amid rising global COVID-19 cases. So this news report is coming out of RT News, as you can see right up here at the top, right? It's not a big secret of where it's coming from, but it's basically saying that the gold jumped to its highest price in more than a month on Monday as a surge in coronavirus cases and concerns over global economic recovery pushed investors to the safe haven metal away from riskier assets. So as you can see, I mean, this was it was spot gold was at 17. It hit a little over 1700s when we talked about one of his times recently. Then it kind of climbed up to 1750. We're at about 1771. That's where they were talking here. But as we saw just earlier, it's actually a little bit higher than that. So the talk about the gold going to 2000 is a very likely possibility. Now, could we see it go down a little bit? Sure. Would I be selling necessarily at that point? Not a financial advice, but just my sort of personal take. No, I wouldn't. I would probably use that as a position to get into more of it if I can. Okay, if I can, because I do understand that there are people that are struggling financially. And we actually have a very good article that we're going to be talking about and using as an educational component today. Hopefully, we have time. If not, I promise to do it tomorrow. Fair? So if we don't cover the whole like debts and how do you deal with it and how do you get out of it today, we're definitely going to cover it tomorrow. So make sure you stay tuned today and tomorrow because, well, tomorrow we're going to have a brand new show. I'm going to see all kinds of neat and interesting things. And one of those may be necessarily how to get out of debt, right? But there's also going to be plenty of news for us to cover. Now, I'm going to switch a little bit from gold because gold is a very good deal. It is going up in price. People are buying it. People are holding it. Central banks have been doing it for a little while. So they're slightly ahead of the general population. But I think general population is getting into gold. And just in case you're wondering, I am a very big proponent that you should be holding on to physical precious metals, not paper, meaning I wouldn't necessarily be getting into the ETF and trading and stuff. For me, it's sort of like an insurance policy, okay? So now that we've covered that, then hopefully you're on the same page. And if you're not, hey, let me know in the chat. Let me know in the comments. And I do want to welcome, now that we're up to the chat, I do want to welcome everybody who is watching live on onedealaway.com. And we're going to go in and answer questions and hang out after we cover what's going on in the news. So hang tight. Okay, so here we go. Now we're switching over a little bit to cryptocurrencies, and for a good reason. We've been talking about on this channel, and many other channels likely have been talking about it, but we've been talking about this channel that, my premise is that the money is going to go digital, whether we like it or not. And we have basically two choices. We can go with what the governments are creating, which has its own risks, or we can jump into the cryptocurrencies that already exist and find ways to protect ourselves. Now, gold is one way to protect ourselves. Cryptocurrencies is, in my humble opinion, a second way to protect ourselves. And again, not a financial advice. None of the stuff that I share here is financial advice. It is just sort of my way of thinking and my way of processing information that we have. So as you will see, this article basically talks about Italy approving new guidelines for central bank digital currency. And we're going to talk about it a little bit here, and then we're going to look into what's going on in the world of crypto, okay? So Central Bank of the United Kingdom, NEV, Sweden, Thailand, China, and the US are studying whether there are advantages of the digital form of the fiat money. And lo and behold, the answer is yes. The government and banking elites will seize even more power when they're able to accomplish that task. And I think they'll be able to accomplish it relatively quickly and easily. Central bank digital currencies, CBDCs, the digital fiat is the digital money that can be directly sent to people's bank accounts and eliminates physical cash. Now, with the coronavirus, we've actually seen many businesses, and we've been reporting on it as well, many businesses are stopping to actually take cash. People don't want to accept it. They're all going into the cards. They're going into the QR codes that we've seen. They're using, phones to actually pay stuff. And we're going to see way more of that. And, of course, as digital currencies continue and proliferate, as they say, it is going to get even bigger. Now, here's some of the stuff that are potential challenges that I have, and it sounds like the gentleman writing the article for Zero Hedge has as well, is that CBDCs have a government complete power over currency, right? They control who gets money paid when, they control who can withdraw, they can control what you can use the money for and what you can't. For example, we're seeing that some of these payment checks or whatever that are coming out of the government, that many places you can't, when they send you a card, you can't use the card, you can't pull the cash out, you can't use it for much of anything. You can only use it to consume, to spend. So that's kind of one of the controls that they have. The other control is they can see exactly what you purchased, what you earned, and automatically take the taxes out. Now, on one hand, that's kind of nice because you don't have to worry about like filing taxes every year, right? So that eliminates that process. On the other hand, they're taking stuff out without your ability to kind of take a look at it and say, well, wait a minute, I have some deductions and stuff. So whether that is going to make accountants more desired or less desired remains to be seen, but it is definitely going to be interesting. Another piece is that if we hit financial crisis, for example, like we are in one right now globally, not just locally, globally, well, that means that the government can actually, create sort of stop your ability to take the money out, which you can't even take it out. Where do you take it out if it's all digital, right? It has to live in some sort of digital wallet. And I don't know if they're going to be creating those wallets because it's going to be connected from your bank account directly into one of these things. And then we're just going to be scanning each other's phones and pressing buttons. And that's basically how it's going to be. So plastic is going away. That's my firm stance, as is paper. The only thing that is going to be is, well, digital transmission through smart devices. So that's kind of how the thing is going to work. Now, when they're talking about is when a financial crisis strikes, it will allow governments to do bail-ins. And then, whether people like it or not, they're going to be forced to take a haircut. All of the stuff gets back into the deposit institution, and we move on. Now, the executive committee of the Italian Banking Association recently approved new general guidance for CBDC. And they're basically saying, yep, this can definitely work. Here are the 10 different things that they're talking about. Some of it is a bit more technical, but let's cover it nonetheless. Monitor stability and full compliance with European regular framework, right? Cool. They can do that. Italian, which by the way, that's what cryptos do anyways. Italian banks are already operating as distributed ledger technology, which is what most cryptocurrencies are using. So they are saying that's not a big deal for them. They can roll it out pretty easily. A programma, programmable. My gosh, sometimes English. A a programmable digital currency, I'm not saying that word again, represents an innovation in the financial field capable of profounding, revolutionizing money and exchanges, which I agree. That's the reason why so many people who are in crypto space are excited about it. One of the reasons. Digital money needs to be fully trusted by citizens. Yep, they do have to trust it. So I think if they deal with this part out and do it, and if we stop trusting governments, which I think people are starting to more and more have less trust of the governments, they might have to create some sort of sound money, meaning it needs to be backed by something and it can't just be digital stuff. So this is where gold has a potential to actually step in. Although there's also some cryptocurrencies like Bitcoin, for example, that might have a potential to do that as well. So, anyways, only time will tell. Uh, they're talking about the fact that they need to reconcile innovation and work with the central bank and so on, issuing a European CBDC intended for the public. So it's basically money 3.0, right? Because cash was, well, I don't know, maybe it's like five, because didn't we have like shells at some point? But as we know it, the modern humanity, cash was money 1.0, credit cards were 2.0, PayPal, Venmo, that stuff is 3.0, and I guess digital crypto fiat is 4.0. So exciting stuff, exciting stuff. Then they're saying that they will need to work on the distribution, conservation, exchanges, model digital currencies, maintain the effectiveness of the monetary policy transmission mechanism. They're saying it needs to be high ease of use, which, nowadays with all of the programs, it's very simple. You point the camera to a QR code, you put in the amount, you press a button, done. At least that's how it works with regular crypto. But anything can happen, as they say. So who knows what they're going to do? But they're basically saying it needs to be super easy for people to use in order for them to use it, which I absolutely agree. And that was part of the challenge with the cryptos when they were first created, because they weren't as easy to use. It was much more complex, much more complicated. You kind of had to be a little bit on the techie side, a little bit on the programming side in order to do it well. And that's what prevented me and many other people, because I might look like a teen, but I am, uh, you know, Technosaurus Rex. I do struggle with technology quite a bit. I do see a power of it, but I do struggle with it. And, I am doing my best to study and learn as much as I possibly can to keep up with the world of technology. So, particular attention must be paid to the citizens' personal data protection profiles. So security of the data has to be secured, and CBDC will enable a series of use cases of great interest. And I agree with it. So there you go. That's basically what is going to be. It appears, as they said, the end of physical cash is ahead. And I agree. I mean, I have been talking about the fact that it's going to stop, because even prior to COVID, asking people if they have cash, like, good luck. Very few people had any cash. Mostly it was plastic. Nowadays, we're seeing all the way through Asia. It's been happening for years, if not decade or longer. They're all walking around with just a cell phone. They don't carry around the wallet. They don't carry around cash. They don't carry around plastic. They carry around a wallet, and this wallet has their ID on it. Or wallet. Well, I guess it is a digital wallet of sorts. They carry the phones with them, and everywhere you go, there are QR codes. Even the street performers are doing that stuff. You basically scan, send, done. It's very simple, very easy, and I think that is coming our way. But now, before we go into what I wanted to share with you when it comes to the cryptocurrencies, and we're going to talk about the case for Bitcoin potentially going to 12,000 or more, and what some DeFi projects are doing and why they are pumping like crazy, I do want to go in and take a very quick look at the market. And so we're going to switch, and let's take a look at Dow Jones. As you can see, one day it's up, 5 days it's down. Let's take a look at NASDAQ. NASDAQ, All right, one day is up, 5 days. It's sort of sideways-ish, but kind of up. And of course, yesterday helped a great deal. S&P 500, it is up on one day, 5 days. It's sort of sideways, but overall downtrend. So there we go. That's kind of what's going on in that world. Now, let's switch over to what's going on with Bitcoin. And the PayPal Bitcoin rumors are potentially setting Bitcoin to rise to 12,000 level. Forget it. We've been trying to break the 10, 10, 5 for forever. Been hitting, bounce, hit, bounce, hit, bounce. We've been trading in the channel for a very long time. And now folks are saying, forget the 10,000, 12,000 is a potential over here. So this is coming out of Cointelegraph, as you can see already. So let's take a look at what's going on. Now, Bitcoin is coming to PayPal and Venmo, maybe just a rumor. However, that is definitely creating people, making people to be very, very bullish. Now, there was news that was announced that PayPal and Venmo might be going to be going not just digital, but going crypto and allowing for Bitcoin to kind of go in. Now, of course, that made Bitcoin go up to 9,600 level. And that's not where we are right now. I want to say we're about 9,400. And you know what? Matter of fact, why don't we look it up? Coin market cap. Let's go. Let's take a quick look. Hold on, hold on, hold on. And we can see that Bitcoin price is 95.83. Okay, so it is slightly down from what they were sharing, but not like severely down. So anyways, now they're saying that Max Kaiser was saying that this move is going to create a global hash war. Now, of course, what we've seen is that the Square actually has rolled out Bitcoin support with the great success, and that was done about, say, last year. And now they're basically saying that, hey, PayPal and Venmo doing this, of course, it makes sense because if one has rolled it out successfully, then there is a great potential that the other one might do the same thing. Now, PayPal has made a name for itself in recent years as a crypto critic, declining to entertain the idea of supporting it. But now they're starting to hire people in the crypto space, in the blockchain space. And of course, people are talking about, is Bitcoin coming to PayPal? Now, PayPal did not actually give any feedback of yes or no. Hydration. But people are saying, this is looking very, very fishy. We think that this is coming out. So all eyes on $12,000 Bitcoin. Now, the news has caused analysts to alter their outlook on Bitcoin price action. And they're basically saying if it pushes above 9,600, there's a high potential of five figures returning. At this point, 12,000 breakout is a firm possibility. Now, what they're saying is that Cointelegraph market analyst Michael van de Pope, and hopefully I have said your name correct, so if I haven't, my apologies. He repeated the argument that strength of Bitcoin is here for a push towards $12,000 should new resistance levels become support. Now, of course, we're going to be watching to see what actually ends up happening because, we don't know what exactly is going to happen. But, there's a high potential that this actually might happen. So keep an eye on that and make sure if you're trading, make sure you trade intelligently, put all the stops and read the charts correctly, use your technical, use your fundamental, use all the tools that you got in your box. And if you are long-term just investor where you just buy and holding, then DCA might be the best way. Again, not a financial advice, just a sort of thing of how I'm thinking through all of these things. Now, we just talked about that the Bitcoin has a potential to go to the 12,000 level. But if that ends up happening, if the past ends up being sort of rhyming or repeating, as they say, then we can actually expect that there's going to be some altcoins, the alternative coins that are going to pump. And there has been a specific set of those coins that has been pumping for the last few months called the DeFi tokens. So let's talk about it. Why DeFi tokens are outperforming Bitcoin price. Now, they're basically saying posting double-digit gains outperform Bitcoin But can the rally continue? Of course, it can. We don't know how long, but everything that goes up is going to come down, and when everything comes down, well, it typically tends to go up. Uh, and it sounds like even in the bankrupt corporations, that is still the case. Sorry, I still can't get off the Hertz train. I can't help myself. Anyways, decentralized finance, or DeFi, has been a rapidly growing sector. The new way of lending and saving has garnered positive media coverage and praise, and many DeFi based tokens have been pumping strongly in 2020, with some tokens showing gains above 60% in the past 5 days. That's a huge pump. Now, anything, in my humble opinion, not a financial advice, but in my humble opinion, anything that pumps crazy like that, right, that jumps in, does typically tend to come down a little bit, calm down. If there's ever a gap, it kind of has to consolidate a little bit, and then it has a potential to go back up. So just something for folks to be mindful of and pay attention to. Uh, but I think that there's a great potential within some of the projects that we're going to be seeing here. And so Aave, a London-based DeFi lending platform, strongly outperformed Bitcoin this week with a 66.46% gain over the past week. MakerDAO, another popular DeFi-based token, also gained 25.6% in the last week. And right here, you can actually see uh, the different cryptocurrencies or different DeFi projects, and of course, what the token is, what the category is, how much of the USD is locked into the project, and of course, what the performance has been. And the interesting piece is you have Bitcoin right down here at the bottom, right? And you can see in the past 7 days, it was like -2, past 30 days, 1.3, past 90 days, 80, almost 82%, right? I mean, not a bad return for 90 days. I'm going to take 82% in 90 days any day of the week, which is what makes Bitcoin super amazing still. But these are interesting ones. Now, these are much smaller on the volume, much smaller on the uh, liquidity. And so something to be careful, because whenever there's a lower liquidity, there's potentially slightly higher risk. So something to be careful of. But if you are going in and buying some of these projects on long term and really like it, then it might make sense. And I have been eyeing Aave and Kyber, as well as MakerDAO, Loopring for a while. I haven't looked at Bancor or Melon Protocol, so but I have looked at the other ones. So, anyways, let's take a look at it. So Aave is uh, in the lending category, as is MakerDAO, right? And then you have the Kyber, Loopring, and Bancor as decentralized exchanges. Now, Melon Protocol is asset management, and I don't know much about it. So, Melon has just about 1 million, which is not a whole lot. But if you look at, Bancor, for example, is almost 18 million. MakerDAO is 485 million, so almost half a billion, and Aave is 81 million. So these are some of the ones. Now, it's an interesting piece that they haven't put in a Compound, because Compound has been doing some crazy things over the last few days, but probably because it won't hit the 30 or 90 days. I don't even know if it would hit 7 days when they wrote this article. So that's the reason why. But we are seeing some crazy stuff happening with Compound as well. Decentralized exchanges, DEX tokens like Kyber, Loopring, Bancor, prices have also risen by double digits. Ethereum 2.0 is coming. That is true. We don't know when exactly, but it is expected to come at some point. They're saying this summer in this article. I'm going to say probably fall. Probably fallish. We're going to see sort of the initial phase of the whole thing, and the expectation is that all of the phases are going to be completed 2021, 2022 maybe, and the reason I'm saying 2022 is because they have been sort of delaying stuff. When you're developing software, Lord knows I have learned my lesson. Whenever you think that you're almost done, you're not really done, and there's all this additional stuff that is happening that has to come into place. And then, it's a constant evolution, constant process when it comes to the tech stuff. So, So that's the reason why I'm saying it might be 2022 by the time the final phase is, but I could be wrong. They could potentially roll out 21. The Ethereum network has been dealing with some scalability issues, which can affect DeFi growth to a great extent. However, Ethereum blockchain network has known about that. They have been working about it, and Ethereum 2.0 is the next update for the cryptocurrency, and it's probably the most important yet. And it's something that's been planned since the start of Ethereum project as a whole. Update is expected to occur sometimes this summer. Like I said, I think it's going to be more like fall than summer. Now, the upcoming implementation of phase 0 is not expected to have a huge impact on the network. However, first phase of Ethereum 2.0 staking may be reason enough to investors to feel bullish. Water time. Now, the reason that they're actually being bullish is because you can go in and stake. Now, staking has different meanings for different projects, but it's more now means that you basically lock it up, kind of like a CD in a traditional banking, where you put in some money and you get some sort of return reward for that stuff. And people are saying we need to buy more Ethereum so that we can actually stake it in the 2.0 project. So just figure explain that for you in case you're wondering. Interaction with the Ethereum network through simple transactions smart contracts has recently hit an all-time high. According to ETH gas station, USDT, and various decentralized exchanges have been leaders when it comes to gas usage. DEX tokens have outperformed centralized exchange tokens like Binance and Bitfinex. And of course, we kind of expected that would happen. And you can see quite a lovely chart here by Messari that basically talks about this particular component. You can see centralized exchanges on the left-hand side, and they're up, 44%, which is not bad at all, right? But then you have DEX or decentralized exchanges that are up 241%. 44% all of a sudden means absolutely nothing. And, you can see of what's going on with the centralized, you can see the different exchanges and how they have grown. And then you come in to the decentralized, and you can see that they're pumping like crazy, absolutely crazy. And so this is a very cool thing. And I think it's an important aspect to take a look into, right? Now, the DeFi and other apps are gaining traction within Ethereum network and terms of actual use. Most of these coins are built on Ethereum network, and they're using Ethereum network to build their projects. So, of course, Ethereum scaling is very, very important for all of these projects to stay alive. But that's the reason why I am very bullish on Ethereum. As I am bullish on the DeFi, I'm very bullish on Ethereum because it all rides on Ethereum. It all uses Ethereum. So for me, Ethereum just makes sense. Again, not a financial advice, just the way I am processing things in my little world, okay? Now, more projects and user bullish signal. DeFi tokens are also becoming an increasingly interesting investment vehicle, allowing high yield farming through lending and an increase in value locked in lending apps. And you can see right here from DeFi Pulse that the value of the amount of dollars that is locked in DeFi has actually, skyrocketed. Now you see a little bit of a sort of plunge down, but I mean, we are talking what, $1.5 billion, right? Would that be accurate statement in here? And we can actually take a look at this because we're looking at it at Coin Telegraph. We can actually look at right on DeFi Pulse, and you can see right here we can actually interact with it a little bit, and you can kind of see how it's been performing. That just recently it just went through the roof. You see the little dump thing, and we can see a 7-day. And if you switch to 7-day, this is very, very bullish trend. We had a little bit of a drop, and then it went up. Now, if we take a look at the entire year, you can kind of see we had flat, kind of went up, went back down in March, but we've been back up and hit the higher. So this is an interesting piece for me when I look at this stuff. It's very, very cool. And of course, you can find this on DeFi Pulse. Okay. Now, DeFi seems to be growing exponentially. Of course it is. And what they're basically saying is that their number of new assets is almost doubled in the last month. And here is basically what the chart is showing. Right here, you can actually see what the tokens are in the color. Now, some of them are very similar, like token set, compound, and AVE are like very similar blue in my little world. Synthetics and Uniswap V2 are, again, same color. Real and Uniswap are same color, learned Bitcoin. So as you can see, vast majority of it is the blue, the dark, so synthetics, token set, AVE, compound are looks like top. Synthetics and Uniswap V2 are sort of that middle part right over here. And then you have red, that is Realt, and Uniswap, which is also a version of Synthetics, I would say. Then you have this like weird color, Bancore and Idle. And then you have green, which is Balancer and Curve. And then there's a Bitcoin and I earn somewhere, but I can't see it. I mean, I'm sure that it's in there. You just can't really see it. So it's super tiny. So the biggest piece is just to kind of see that the DeFi assets are like, really, really skyrocketing. So now, not only has the overall activity and number of projects grown, the number of DeFi users has also reached new all-time highs near 600,000, according to data from Dune Analytics. And you can see the project right here. I'm going to hydrate a bit more. As I talk more, I get thirsty more. So there goes that. Okay, so you can kind of see the growth and what's been happening, and it's been actually quite fantastic that there's more and more users coming into the DeFi space. So this is quite exciting for me, and I personally expect that the DeFi space is going to, explode. Like what we saw with Bitcoin in like 2017, right? That's kind of what I think might happen with DeFi in 2020 and 2021. So we'll see. Only time will tell. But I have great expectations. But again, I could be wrong. But I do have great expectations for decentralized finance as a whole, as an industry, both short and long term. Short term, of course, it's going to be much more volatile. Long term, I think it has much greater potential to kind of sustain. The growth in price can maybe be locked as a bet in Ethereum 2.0 and its capacity to fix the issues in the coming years. Staking may take over lending, and that is a potential, right? But I think both of them will exist because just like in traditional banking, you have staking, like we talked about. If staking is sort of like savings, right, like the CD, in traditional banking, we have both. We have the savings, we have the CDs, we have the lending, we have the borrowing. And I think both of them will exist. And of course, they did ask the CEO of AVE of like, what are you doing? What do you think? And it's right over here. And he's saying like, I don't know, both could potentially have. So we'll see what happens. People might have to stake, but they also might have to borrow or lend. So I think both will actually exist. So there you go. That's sort of the news of what's coming here, and kind of the interesting and exciting piece for me personally. Now, one of the things that I did also promise to talk about is to talk about the real estate and what's going on within that particular world and spectrum. And here it is. We're getting news that we're receiving mass exodus from some of the major metropolis in United States. So let's take a look at the article from Zero Hedge. Now, mad rush to get out of the cities. So many wealthy people are rushing to move away from the big cities, and that it is creating a bit of a real estate boom in many suburban areas, small towns, and rural communities. So many people are all thinking the same thing, that the demand for housing in certain areas threatened to greatly exceed the supply. Now, here's basically what we're seeing. We're seeing, and I have actually been talking about that this is going to happen. Now, at the time when I talked about that this is going to happen, I started to talk about this in February and March. I talked about it that is going to happen, but I talked about it for a very different reason. I talked about it for the reason that people can work remotely from anywhere. I did not necessarily see I should have seen it, and I think I thought about it, but I haven't seen it that it would come up this quickly. That there would be so many riots, so much looting, so much shooting, so much sort of crime kind of happening in some of the major metropolis. And that was my argument for why people are leaving. But now, this particular article is talking about the fact that people are leaving for obviously the reasons that it's cheaper, it's safer, it's more affordable, and so on and so on. So let's take a look at the article. One real estate agent in the San Francisco area describing it as a mad rush to get out of the city. Quote, there's a mad rush to get out of the city, said Ginger Martin, a real estate agent with Sotheby's. What I'm really doing well is right now is anything that is turnkey. Mortgage lending, unfortunately, standards have really tightened up over the past few months, and so is limiting the number of people that are able to successfully relocate. In this environment, it's just wealthy folks that are able to move away from San Francisco and purchase a new home somewhere else. Even with the good credit, lenders are not pre-approving folks like they were once. And so what it is doing is paralyzing vast majority of people to actually be able to relocate to some of the safer areas. So what we're seeing is those that have the most means are the ones the first to go. We see this regularly in countries, in states, in cities, whenever there is a loom for potential uprising and that kind of stuff, the wealthy typically pack up their cash and they go. It makes it very easy. The folks that remain are the ones that are basically left, quote unquote, holding the bag and dealing with whatever is coming their way. And unfortunately, I see that coming potentially right now for folks as well in these cities. On I choked on air, y'all. Oh, mom. My mother was the only person in the world that I knew to do this. And, as I'm aging, I am starting to pick up some of her tricks. Choking on air is one of them. And now I'm choking on air live. So there you go. That's what happens when you go live. On the East Coast, violence is one of the primary motivating factors that is causing people to suddenly pick up and move. Chicago is experiencing even more violence than New York City. So New York City folks are flooding and going into New Jersey and going into rural areas of New York. Of course, the wealthiest are going even further away. We're seeing reports where they're moving to Connecticut. Some are going as far as Rhode Island, Massachusetts, Vermont, and New Hampshire, although there are some that are also relocating to Maine. And that's because it's still easily commutable. You can still get places, but it's much safer. And if you're working remotely, then who cares? Whether you sit in your apartment in New York City or you sit in your cottage on the lake in New Hampshire, nobody cares as long as you have internet. Of course, that's the big piece. That's kind of what's going on. Now, the Chicago is experiencing even more violence than New York City, and of course, we are seeing that happening even over the Father's Day weekend. Like people are just looting, shooting, just damage all over place to property, to life, to everything. So it appears that things aren't going to be getting significantly better anytime soon. Now that the lockdowns have ended, the number of confirmed COVID-19 cases in the U.S. is starting to surge again. Now, they're saying on Friday we witnessed more than 30,000 newly confirmed cases in the U.S. for the first time in many weeks. The coronavirus pandemic is getting worse. The U.S. economy continues to deteriorate very rapidly, and nearly 46 million Americans have now filed new claims for unemployment benefits since the pandemic began. More than 100,000 businesses have permanently shut their doors, and U.S. consumers have skipped payments on more than 100 million loans. So, we are basically what the article is talking about is the stuff that I have been talking about. There is no V-shaped recovery. We are in this for a deep, long run. I don't expect us to recover in 2020. I think they're going to keep on pumping and trying to keep us on life support. 2021, who knows? I know that people are predicting that is going to go up. I don't know how I feel about that. I don't know if that is really going to be the case. I mean, only time will tell, but we'll find out once we get there. So, I do have a grave concerns, not just for United States, but for the world as a whole, because I do see some of the things happening all over the place. Tensions are so high in this country that a recent survey found that 34% of all Americans believe that there could be a civil war within next 5 years. And here it is. I didn't highlight it, but here is where basically they're quoting. The latest Rasmussen report, National Telephone and Online Survey, finds that 34% of likely U.S. voters think that the United States will experience a second civil war sometimes in the next 5 years, but that includes only 9% of who say it's very likely. So, as you can see, a lot of people are very much afraid of what's going on. And we see this in great deals when we experience, sort of this divide that I have been talking about for years. Now, of course, I haven't been going live publicly for years, but in all of my talks, in all of my presentations, in all of my teaching and everything that I've been doing, I always have been talking that whenever you have this great divide of the haves and have nots, you have conflict. And the wider the divide, like off the camera, as they say, the bigger the conflict. And we're seeing that happening, and it's coming out faster and faster. And honestly, with Fed printing money, and they're saying, yeah, we're helping. They're helping the wealthy. They're not helping the poor. And the more they print, I fear more people will get even more outraged, and we're going to see more of these things start to pop out and come out. And for that reason, I am also very bullish on the cryptocurrencies, on gold, and really finding ways to protect myself. So maybe you are there as well. And I think that everybody should pay attention to these things and find ways to protect themselves. And so what they're saying is that, people are moving, people are exiting. And, what they're saying is that if you're going to move, you will need to do it quickly because, as I have discussed in this article, there are lots of other people thinking the exact same thing. And yeah, people are moving out. That's something that I have been talking about. I've been talking about folks who are, looking to be investors, to look to invest in areas that are outside of the main cities because people will be moving to those areas. That's kind of where I was standing. I still stand behind that. I still believe that some of those areas. Now, the cities could pick up great steam. Of course they can. Of course they can. And they might, right? But I don't see that happening right now. There has to be sort of exodus, price crash, then you buy it, then you ride it back up. Okay? That's kind of how I see it. Now, we'll see how it's all going to play out. Again, not a financial advice, just a way of my thinking of what I think might happen. Now, I did promise that we're going to talk about the debt piece. I'm looking at the clock. We are actually, unfortunately, running out of time. However, join me tomorrow at 7 a.m. New York time, right? Or Eastern Daylight Time, only on onedealaway.com/live to go live, to interact for Q&A and everything else. And we're going to talk about how do you dig yourself out of debt. That is going to be tomorrow's news, tomorrow's episode. We're going to cover some other stuff. Of course we are, but that is going to be the main topic tomorrow. So make sure you tune in for that. If you're watching this on YouTube, do me a huge favor, hit the like button, hit the subscribe, hit the bell so you get notified every time that the video gets posted on the replay. And of course, then jump over to onedealaway.com and watch live. Make sure you subscribe for Telegram notifications, and you can always sign in for Q&A. So, thank you for watching. Until next time, stay forever money blessed, and do remember, you are only one deal away.